Let me tell you about a graveyard. But not one with tombstones. This one is digital. It's this vast, invisible resting place for thousands upon thousands of companies, all those brilliant ideas that were supposed to change the world. This is where innovation goes to die.
And get this, the price tag for filling this graveyard is absolutely staggering. We are talking about more than $500 billion in vaporized capital. And that's not just numbers on a spreadsheet, right? That's thousands of teams, years of blood, sweat, and tears, countless dreams, just gone. It's the shocking, hidden cost of failure. So you gotta wonder, what's going on here? Is it all just bad luck? Well, what if I told you these failures aren't random at all? An analysis of over 1,700 failed startups found something chilling. They almost all die from the same 7 mistakes, repeating over and over with terrifying precision. These aren't tragedies, they're patterns.
All right, so to really get this, we can't start at the end. We have to go back to the beginning, back to the dream. And I want you to imagine for a second that this is you. You're standing at the start of a journey that could change everything.
It always kicks off with that spark, doesn't it? That one killer idea. You are 100% convinced you found a problem no one else sees. And you pitch it, people believe in you, and suddenly the money's flowing in. You build a rockstar team, the office is buzzing. I mean, you're on top of the world, ready to build the future. But you just can't see the shadows that are lurking right around the corner. So, hidden inside the DNA of every single startup are 7 potential killers. These are what are called antipatterns. They are the villains of our story, and they're the things that turn that dream into an absolute nightmare. The hallucination, the slow bleed, the bonfire. Let's meet the most deceptive one first.
Okay, so meet the hallucination. This is the founder who builds this beautiful, elegant thing for a customer who isn't real. You're solving a problem that sounds amazing in a meeting, but out in the wild, nobody actually has that problem. This one killer is behind nearly 12% of all startup deaths, and it has torched almost $15 billion.
So how do you spot this killer? What's its MO? Well, the red flags are tricky. You know, you do customer interviews and people are polite. They say your idea is interesting. Your sales pipeline is chock full of pilot programs that somehow never convert to real deals. You find yourself having to explain the problem to people before you can even start talking about your solution. You're basically mistaking politeness for actual market demand.
And this quote just hits the nail on the head. You get so wrapped up in building something cool, something elegant, that you completely forget to ask the most important question of all. Is anyone out there actually in pain because this thing doesn't exist yet? If the answer is no, you're building for a ghost.
Now let's meet killer number 2. It often shows up right after the hallucination. This one is called the bonfire. And this isn't just about running out of cash. Oh no. This is about spending money like it's never gonna run out. You treat revenue like it's some detail you'll figure out later, all while you're just shoveling cash into the furnace of your monthly burn.
And the warning signs here, they are crystal clear. You know your monthly burn rate by heart, but you have to check a spreadsheet to remember last month's revenue. Your whole financial plan isn't about getting profitable, it's about surviving until the next fundraising round. And you're hiring people for jobs you'll only need when you're 10 times bigger. You're confusing being busy with making progress. And here's the crucial thing. These 2 killers are basically 2 sides of the same deadly coin. The hallucination is about building the wrong thing. The bonfire is about building it the wrong way, in a way you just can't sustain. One's a failure of vision, the other's a failure of discipline. And this chart just shows you the insane scale of the damage. I mean, just look at this. The hallucination, yeah, it's bad. Getting crushed by a competitor, also bad. But the bonfire, it's a financial black hole. It has burned more money than pretty much all the other killers combined. We're talking a terrifying $285 billion.
But here's the twist. This is where the story gets really interesting. The real danger isn't one of these killers showing up alone. The true threat, the thing that turns this into a business thriller, is how they team up. They create this deadly spiral that is almost impossible to pull out of.
And that brings us to the key turning point. After looking at thousands of these flameouts, what is the one single mistake that proves to be fatal time and again?
It's this. Startups almost never die from a single gunshot wound. They die from a chain reaction. The fatal mistake is not seeing that very first domino before it starts to wobble, before it triggers a cascade that brings the entire company crashing down. So think of it like this. It starts with the hallucination. You're building something nobody really wants. Okay, So because there's no real demand, you can't make money on each customer. That creates the math problem. And then, to hide the fact that your math is broken, you start spending like crazy on marketing to create fake growth. And boom, that ignites the bonfire. See? One anti-pattern triggers the next, and each one makes the damage even worse. And look, this isn't just some theory. This is exactly how massive, famous companies implode in the real world. So let's take a look at the anatomy of some of these huge collapses. I mean, this just shows you how often these exact patterns play out with names you know. Silicon Valley Bank? That was a classic bonfire. They just ran out of cash. Wirecard? That was a 7-year-long slow bleed, playing the outlaw until it all came crashing down. These patterns are everywhere once you know what to look for. Take WeWork, for example. They burned through an unbelievable $22 billion. How? Because they were a textbook case of the math problem. They were signing 15-year leases but selling month-to-month memberships. Every single customer was losing them money. They even tried to hide it with these ridiculous made-up terms like community-adjusted EBITDA. But at the end of the day, you can't outrun bad math. Okay, so we've walked through the graveyard, we've met the killers, and yeah, it's a pretty grim picture. But the whole point of studying failure is to learn how to survive. So how do you actually avoid this fate? The first and maybe the most powerful lesson is this. You have to learn to see these patterns inside your own company. The founders who make it aren't luckier. They're the ones who can spot the early warning signs, and they have the courage to name the problem, to say, hey team, I think we're in a hallucination, and then they act before that first domino falls. Lesson number 2 is all about brutal honesty. You're going to fall in love with the story you tell everyone, your investors, your team, yourself. But stories can lie to you. The data doesn't. When your metrics are screaming that something is wrong, you have to listen to the numbers, not the pretty story you've been telling yourself. And finally, the ultimate lesson. Your goal is not growth at any cost. Your number one goal is survival. A startup that's still alive can always pivot, it can always learn, it can always find a way to win. You have to prioritize staying alive. Make it your mission to survive so you actually have a chance to fight another day. The startup graveyard is absolutely filled with cautionary tales just like these. So we've got a question for you. Which company's collapse should we dig into next? Drop the name in the comments below. And if you want to get smarter by studying the biggest screw-ups in business history, make sure you subscribe for our next deep dive. We'll see you then.